I'm Steve Peters, President and CEO of VisionQuest Wealth Management. In this webinar, and for the next roughly 6 minutes, I'm going to provide you with an overview on the goal-based investment philosophy that we use at VisionQuest Wealth Management and how it is helping investors better control irrational behavior. As we look back over the first decade of the 21st century, we can draw one undeniable conclusion. It was a bear of a time for investors. Major market declines from early 2000 and then again in 2008 dragged equity returns well below their long-term averages. In a recent study by SEI Investments on investment behavior, the study compares long-term returns of equity fund investors against the S&P 500 index. What the study showed is that every year since 1998, the average investor has significantly underperformed the index. Why? Because the average investor continues to hurt themselves with their investment behavior. So how can we improve our behavior in the coming decade, especially in light of the continued volatility, by focusing less on the market behavior and more on our own behavior? At VisionQuest Wealth Management, we can accomplish this through a goal-based investment philosophy versus arbitrary indexes that mean nothing to the average investor. So what is goal-based investing? Well, rather than focusing on traditional investment management tactics, goal-based investing focuses on a client-centric approach to wealth management. It is when you combine the traditional methodology of modern portfolio theory with what we know about investor behavior. Goal-based investing is oriented around the investor. The efficiencies of an investment strategy is not measured by the traditional yardsticks like market indices, benchmarks, or standard deviation. After all, these often have little real-world meaning to the investor. Goals, however, are very meaningful to clients, and that's what distinguishes VisionQuest Wealth Management's approach from others. VisionQuest Wealth Management offers you investment strategies specifically designed around client goals. Performance is measured by the client achieving a stated goal, and risk is a function of failing to achieve that goal. More to that point, goal-based investing recognizes the investors have multiple, often conflicting goals. So rather than pooling all client assets into a single portfolio, we create a separate portfolio for each goal. So whether the client is accumulating assets for their retirement, saving for their children's education, or building a legacy, there's an investment strategy specifically tailored to the goal. Once VisionQuest Wealth Management has pooled dollars against each goal, we focus on these next 5 steps. These 5 steps encompass a process built around a deep understanding of the markets, disciplined research, a sharp focus on risk management, and a commitment to goal achievement. The end objective is to produce consistent returns, lower overall volatility, and measurable progress towards goals. So let's look at each step. The first step of the process is asset allocation. Getting asset allocation is an important step, simply because research shows that over time, more than 90% of a portfolio's return will come from asset allocation. Next, we focus on investment selection. VisionQuest is a manager of the investment managers. We believe this increases the potential for greater performance consistency and lower overall volatility. Portfolio construction is the next step. This is where VisionQuest plots the components together. Working with multiple types of managers and investments helps us do the following. First, capture the best ideas. Then it provides us with opportunities to win in difficult markets, smooths the ride in difficult economic times, and potentially reduces risks that offer no long-term reward. As for risk and tax management, well, risk management refers to how we monitor the portfolio so that there is a better opportunity for a portfolio to perform as designed over time. And tax management is all about helping our investors keep more of what they have earned. The strategies we use can help increase real return because it is not simply about how much you make, but how much you keep. A wealth management strategy built around specific goals offers multiple benefits, not the least of which is value in addressing suboptimal behavior. Bad decision-making is often a function of a lack of information, which some view as a major shortcoming in traditional investment philosophy. Building an efficient portfolio under modern portfolio theory assumes the investor has perfect information about the economies, markets, and stocks. We know, however, that this is not always the case, that we don't have perfect information. At times, investors may have too little information and are driven not by what they know, but by what they feel. And when this occurs, rational decisions are all too often pushed aside by irrational behavior. Let's recognize that the investor benefits from making solid, rational decisions. Today's webinar is designed to educate you on VisionQuest's goal-based investment philosophy and to demonstrate how you, as an investor, can adopt this philosophy focused on achieving specific goals. It is our belief that by adopting this philosophy, you will build confidence in your portfolio, maintain a proper perspective and discipline, and ultimately remain focused on achieving lifetime goals, which I think we can all agree is the ultimate prize for all of us.